Welcome to the RideShare Guy podcast, where you will learn about the rideshare and mobility industry straight from Harry Campbell, who's got over 5 years experience covering the industry and has talked to thousands of drivers. There's no better place to stay up to date, entertained, and educated. So let's dive in.
So Will Coleman is the co-founder and CEO of Alto, an affordable premium rideshare and delivery service headquarters in Dallas, Texas. Alto elevates the experience for passengers and drivers by providing unmatched safety, hospitality, and consistency in every ride and delivery. Will is a former partner at McKinsey & Company, where he led the consumer air and travel practice and helped some of the world's largest travel brands build disruptive strategies for growth. And I believe this is your third time on the podcast. So welcome back, Will. How are you?
Thanks, Harry. Yeah, awesome. Great to be back. This is time number 3. Third time's a charm, I guess.
All right. Well, you must be doing okay, because I keep inviting you back, or I'm just really desperate for guests. I don't know which one it is, but appreciate you joining.
How many times have you had Dara?
I've interviewed him twice, so you've now beaten Dara.
Okay.
So I think you've got a little notch in your belt.
At least it's something.
But he's probably listening right now, so he's probably going to DM me a little bit later and want to come on the podcast next week. So enough talk. Enough talk about Uber and Dara. Today, we're going to focus on Alto. And, I was looking back at my notes, and I actually haven't, I feel like I talk to you and see you a lot, but actually the last time you were on the podcast was over a year and a half ago. I think you guys had just raised money, $45 million Series B, if I'm recalling it correctly. We chatted about some electric vehicles and sort of your growing ecosystem. So, give us a quick update on what's happened to Alto and where you guys are at over the past year and a half.
Yeah, we've been just blowing and going at Alto. We're super excited about coming out of the pandemic and really seeing full recovery across the country and in many of our markets. We've continued to grow in the cities that we have already been in Dallas, Houston, LA. And in the last few months alone, we've opened 3 new markets, Miami, Washington, D.C., and Silicon Valley. So we've doubled the kind of geographic footprint of the business, and those markets. Every time we open a new market now, we see it perform better and grow faster than the one before it. So we're just super excited about the performance of the base business and what's ahead of it. We still have a bunch of growth left to do. We're anticipating expanding to at least 3, if not more markets later this year. And we are continuing to work on our EV strategy. A big part of our plan for 2023 is a transition into EV, and we're kind of building the foundation to support that, including getting our operating centers built out, our infrastructure in place, and working with vehicle manufacturers to get orders in place and work with them on timing of delivery of those orders to begin accepting EVs early next year.
Very, very cool. Yeah, no, it sounds like you've definitely been busy, and I appreciate that recap, because actually I think a number of those things I definitely want to dive into today. Let's start with the sort of geographic footprint of where you guys are now operating. You mentioned Dallas, Houston, LA as sort of your first 3 markets, and also expanding into new markets. Are you sort of seeing more growth expanding in your current markets, for example, the first 3 or, the new 3 markets? Like, how do you kind of prioritize, the 2 buckets?
Yeah, for our business, it's really both. I mean, we have to continue to get to scale, we call it, in our existing markets. Dallas, our original market, is now basically the same size as LA, which opened just over a year ago. So LA has grown exceedingly fast, even despite kind of some early headwinds from COVID in late 2020, early 2021. But we grow our service kind of with our customers, right? So what we try to do is continue to prove the business model by showing that we can drive profitability in our markets. We've done that in Dallas. We're close to achieving that in Houston and LA. But balancing that with growth and ensuring that we're adding vehicles, adding drivers. And then by adding new cities, we're able to also serve our customers in more of the places that they go. We get network effects. We know that like 25 to 35% of rideshare trips happen in cities outside of someone's home city. And so that's part of the reason that we need to continue to expand so that we can serve our customers in the places that they are. And
Gotcha.
you'll see we're entering, some of the largest cities across the U.S. where we're seeing great recovery from the pandemic, but also, that have just massive opportunity. And so, Miami, DC, Silicon Valley, and soon to be San Francisco will be opening, other big cities like Chicago, Boston, Atlanta, Seattle later this year, and then also have our sights obviously on New York City soon as well. So when you get to that kind of scale, we've covered, something like 75-80% of the US by the time we've gotten into those places. And we think that that's really important to ensure that we're serving our customers well.
Yeah. So you mentioned profitability, and I feel like actually I was talking about Alto to someone recently, and the one question they had was, is that model profitable? So how do you think about profitability? You mentioned Dallas as being a profitable market. Is this like an Uber calculation of profitability, or how do you look at it?
Yeah, well, we're not profitable as a company. I should just make that clear, right? I mean, we're
Sure.
reinvesting everything that we make back into the business and more, because it's the most expensive part of the business is growth, is opening new cities, putting the capital to work to hire drivers, put fleet onto the road. Even before we have the demand to support that, we need to create liquidity. We call it a supply, so that when a customer downloads our app or a business customer requests a ride, we have a ride available for them. And we're continuously investing in things like technology and our operation to continue to make our product better for our customers, for our drivers. And so for all those reasons, everything that comes out of a city, we kind of reinvest. But the model does work, and what we built the model on was really this idea that if we take the risk of fixed cost associated with the vehicles and our drivers, we pay our drivers by the hour, not by the ride. They're W-2 employees, as you know, and we provide the vehicle, the fuel, the insurance. Our drivers have no costs associated with driving with us. If we take that risk, and we believe that we can better manage that balance of supply and demand, and by managing that balance of supply and demand, making sure that we have the right number of vehicles on the road to drive the right, what we call occupancy or utilization of those vehicles and of those drivers, we then achieve upside, more marginal profitability for every dollar that comes in above our fixed costs. We get to accept that down to the bottom line for our company. And so, we are profitable on a rides basis in Dallas. We're basically break even on that basis in Houston and LA as of last month. And we're driving to actually create even higher levels of profitability, where we're profitable, including that growth capital that we're spending, because we obviously, that is what we would call cash flow positive, not only kind of profitable, but we're actually producing cash to the bottom line. And we actually think at that point by late this year in several of our markets, at least Dallas, but probably others. And so we're really confident that the model is working, and really that's what gives us the confidence to continue, to start scaling and continue really pushing into new markets, because we can kind of replicate those wins that we've had in markets like Dallas, LA, and Houston, and go make those investments with a lot of confidence that we can replicate it in those other new cities.
For sure. So what drives the profitability on a rides basis? Is it the utilization of your drivers, or is there another metric that you're looking at?
Well, yeah, it's really, drivers make up the largest cost in our entire kind of buckets of costs. A lot of people focus on the cars because when a personal vehicle, it's one of the most expensive expenses you have. But we're able to utilize our vehicles much more efficiently. One, we can acquire them at a discount. We can manage them efficiently with scaled insurance and fuel contracts and maintenance contracts. But we also multiple drivers use our car each day. A driver comes and picks it up, and then when they're done with their shift, they drop it back off, and we turn it back over. We keep it clean, we refuel it, and we maintain it, and then give it to another driver. So the cars are really not the thing we pay the most attention to. What we pay the most attention to is our drivers. We pay them by the hour. We try to compensate them very competitively and in a compelling way. We provide health benefits, dental, vision, 401k with a generous match. So for all those reasons, the cost for us to put that driver out on the road is really what we focus on. And so the time that they spend with a passenger is kind of the metric that we look at the most. We call that occupancy. The percentage of the time that we're paying a driver, that they have a passenger with them. and that ultimately drives fundamentally the kind of profitability and the performance of the business. What we, because we have this different model, what we found is that it's also gives a lot of control, a lot of differentiation for passengers. You mentioned you've been riding a lot, so I'd love to hear your feedback. But it means
don't worry, it's coming.
a bit. We've been able to charge a little bit more too.
Yeah.
And so by achieving those higher average fares, it also allows us. That means when we drive those higher occupancy levels, we ultimately generate a higher degree of gross margin, and then that helps us create true cash flow margins in our markets as well.
Got it. Cool. Appreciate that explanation for a finance noob like myself. What kind of, you mentioned drivers. Let's stick on that point for a bit. What kind of drivers are you attracting, and where are you finding them from too? Because obviously everyone's complaining about a labor shortage. I just worked with a car wash guy right now, and he literally came over and talked to me all about his issues with finding people. So I'd love to know what your experience has been like there.
Yeah, it's been a super tight labor market, and we've, quite frankly, been increasing our driver pay pretty substantially over the past several months in order to.
So this would just be paying a higher hourly rate.
Paying a higher hourly rate, and we've done two things. One is that we're paying more overall, and the second is that we've created a little bit more dynamicism, I would call it, in our pay. We rolled out a new driver plan just a couple of weeks ago. We call it Prime Pay, and what it does is it compensates drivers that work in the busiest hours of the day or the night even more during those hours. And so in a city like LA, we now have drivers during our busiest periods that can make $27, $29 an hour, again, with no expenses.
Right.
And so what that's been able to do for us is ensure that we're attracting potentially part-time people that are just looking to work a few hours a week, but that want to use that money to supplement another income, or they're going to school. And so we've really increased our part-time driver base rather significantly in the last few months, which has been hard to do through the pandemic, given most people were either out of the labor force entirely or looking for a full-time job. But that mix has now improved, and that definitely helps us kind of balance supply and demand in a better way. And in addition to that, I would say we continue to see a really nice I would say balance of recruiting. About half of our drivers in California, for example, are former Uber or Lyft drivers, and the other half actually have never driven before. They traditionally come from other, hospitality backgrounds. We get everybody from retail workers, waiters and waitresses, folks that have worked a front desk job or a concierge at a hotel. These are folks that typically really value the kind of tenets of employment. They like having a schedule. They like kind of the predictability of being an employee. And the protections that it provides, and so they haven't really ever kind of gotten into the gig economy, and we like that balance as well, because we can use their hospitality skill sets to ensure that we're driving a really great customer experience for our passengers.
That's interesting. I never thought of that latter aspect, because obviously, kind of stealing from the gig economy, right? Like there are a bunch of drivers out there, as who, have their various complaints with Uber and Lyft, whether they feel like they should be paid like an employee, or maybe they just don't feel valued. I think in another way, it's, if you want to graduate from driving for Uber and Lyft, Alto is a great option for someone like that. But like you hit the nail on the head. There's a whole bunch of other people out there in retail, in service, who probably have never considered driving for Uber or Lyft or working in the gig economy, because it's like, oh, you're independent, and they might see all the negative side of it and not really be attracted to that. But you can kind of go after those drivers, whereas Uber, really can't. So I guess I like that angle, because I'm never in love with the idea of like competing with Uber or some of these big gig economy companies over the same workers. And I think that's why you have so many companies struggling with acquisition and on the supply side right now.
Yeah, that's a great point, right? Is that ultimately, I tell investors a lot of times, the magic of Uber and what they did is they built this, very variable, marginal cost basis of a workforce that they, don't underwrite or don't pay for when they're not using it, and that's, from an economic standpoint, been very valuable to them. When they don't have rides going through a pandemic or something like that, they don't also have costs associated with it. The downside is that they, in many ways, kind of built their competitors, right? Because they invested in building this supply base that isn't in any way committed. and that can be just, can move between apps very easily anytime they're on the road. And so you're constantly competing for their kind of like share of time, of app time, basically, or road time.
I like to say there's not a lot of loyalty on either side of the equation,
Exactly. Yeah, in the same way that consumers are checking price on both apps. And so really what we're trying to do is solve that problem, right? I mean, I think that's right. We don't see ourselves as necessarily competing for that same workforce. Obviously, we know that some, we get drivers from there, but we're competing, equally with frankly Amazon and Walmart and Starbucks, and we think that that workforce is also massive.
I feel like you're right. I feel like those types of, more part-time employee to full-time employee jobs are probably more who you're competing with than Uber and Lyft, huh? Because I mean, it's kind of like an obvious choice, actually. If you're someone looking at Uber or Lyft or Alto, right? If you kind of value more the predictability and the hourly pay, right? Like obviously Alto is kind of the option in that scenario. So very interesting stuff. Obviously I think that, right now, I feel like in this moment in time, there isn't this huge W-2 versus employee or W-2 versus independent contractor debate, but I know things are brewing. So I imagine too, that'll be another good opportunity for you guys to kind of lean into in the future. But you also mentioned, and I think I saw in one of the announcements you guys made, I believe you had added 900 cars over the past year or something to that figure. And this is something, we work with a lot of vehicle partners and a lot of companies working with fleets. And this seems to be, again, there's the labor shortage we talked about, and there's also the car shortage, the chip shortage, everything it sounds like is in shortage.
Everything's short.
Everything is short, but I'm curious, what has,
including the stock market.
Yeah, specifically on the vehicle side, like how has that affected you? Because obviously you need cars to grow because you're a model, right? You are literally buying and financing these cars. You talked about some of the benefits, but I guess some of the drawbacks is if there's short supply of cars, you maybe can't grow as quickly as you'd like. So talk a little bit about the vehicle side of things, and feel free if you want to touch on EVs too.
Yeah, absolutely. I mean, vehicles have been tough for several months. We're kind of getting out of it, though. I mean, you're seeing that in our announcements. In frankly, mid of last year, we didn't take delivery of a new vehicle from directly from our OEM partners for 6 months, right there. Wow. between chip shortages, the actual
and that was during what period?
Shut down. That was from kind of June to July, June to November, June to December of 2020. I'm sorry, 2021.
Oh, 2021. Okay.
Yeah, we didn't even. I mean, just last year, right? We were really short vehicles in the second half of last year. I think that was when the kind of most of this chip shortage was playing out, and then they had these rolling waves of Delta and Omicron or whatever shutting things down.
Yeah.
But that's really changed, and I think what the advantage that we see to our model is that because we're a fleet customer, because we're purchasing in bulk, we actually get kind of first access to vehicles off the line, and many times even before car dealers, we get the cars that are produced first.
Is that because you're buying, let's say, 500 at a time or 1,000 at a time?
That in many cases,
I guess I'm curious, what's a big number to OEMs? 500 or 1,000?
Well, I think it depends on the car you're buying, quite frankly, right? Like,
gotcha.
We're buying a kind of car that probably isn't in a lot of fleets. If you're buying, an F-150, which every kind of police department and oil services company and everything, in the world buys, then you probably need to buy a lot more to be considered a big customer. But if you're buying Buick Enclaves or Volkswagen Atlases, there aren't many people that are buying those in bulk, quite frankly. Yeah. We're probably one of the only ones. And so a 500 or 1,000 vehicle order is really massive.
Interesting. And this is the reason why I brought it up, is because I feel like I've actually heard this come up many times throughout the shortage. And, when I was speaking at this micromobility conference, I remember someone was talking to a Segway representative, and they immediately, it was like, how many do you want to buy? And I can't remember the exact number. It was like 500 or 1,000. And the guy's eyes kind of lit up. And it's like, oh, come right to the front of the line, whereas obviously everyone else, if they're buying, 5, 10, 20, right, they're lower prioritized. So I think it's interesting your comment, like obviously if there's a number, but there's also probably the specific vehicle type, there's a specific, even model, right, where maybe that number might make a lot of sense. So I think it's like an interesting, maybe solution for folks that, right, are having these issues, right? If they've got a vehicle that works with their fleet that maybe is in lower demand, right? Like kind of what you were saying, those SUVs are perfect for your model, but maybe not many other fleets need them right now.
Yeah. And so that's put us in a really advantaged position, quite frankly, because the used market is still incredibly hot. It's kind of a point in time thing. It's not something we count on, but it's incredibly hot. We have a large fleet that is
Mm-hmm.
ready to be turned over because we were kind of holding these cars for a long time. We have now started taking delivery in much larger quantities of our orders. And so that actually means that we're in a position where we actually have quite a bit of equity in our fleet. You know, we
Right.
actually hold a lot of value there, and we're able to realize a significant portion of it through kind of trading out, you know, our older cars for newer ones. And so that's been a real, frankly, kind of an unexpected positive.
Well, because I mean, I guess kind of like you said, I imagine most people might initially look to that as a negative. You know, you're responsible for the cost of the car, and I don't know, you're kind of almost convincing me the other way that, you know, people are the more expensive, you know, than the cars and the maintenance and all that, and it's giving you this nice arbitrage opportunity with the used market being hot right now, and you being able to refresh your fleet, which also, frankly, I think works really well to your model. I mean, it was only a year or two where I finally realized that Alto, you know, sort of refers to this elevated level of rideshare. You know, I'm a little slow, but obviously when people get in, you know, they expect to be in a nicer, a newer car. I mean, I've called an Uber Black from the airport here at LAX before so I could get picked up curbside. And it was like, frankly, like kind of an old piece of junk, you know, Suburban. I was like, whoa, this is an Uber Black. Like, this is not a very nice car. It's, you know, I mean, I understood, I felt for the driver, but I was like, you know, if I'm paying $60 for a ride, like I would kind of expected a much nicer ride and much nicer car and vehicle.
Yeah, absolutely. I mean, we think I mean, we call that consistency point, right? Which is that when people pay more, what they want is not only a great experience, but they want it to be consistent. They want to know what they're going to get. And so ensuring that we can provide that consistency by having the same kind of cars, high quality cars, newer cars. You know, the oldest car in our fleet now is 24 months old, and those are now getting rotated out. And so it's that sort of experience that we think gets customers, you know, excited about what we're able to offer and coming back time and time again.
So what are people paying for when they call an Alto? I mean, I'm curious actually to hear from you. Do you kind of consider it a competitor to UberX? Do you think of it as like more of a competitor to Uber Black? Or do you think of it as something, you know, screw Uber, we're our own thing. We don't, you know, we're all on our own on doing our own thing.
Well, in terms of a ride, I mean, obviously we know that, you know, people have a lot of choices, and you know, it would be silly to believe that we're not competing with Uber or with Lyft on the ride basis. We think about our businesses much differently in terms of their long-term potential.
But do you think about like a level of service? Because I mean, you know, when people say Uber, I think they're generally referring to UberX, right? You call a ride, you get someone like me picking up and dropping off. You guys, your price point though is, well, I mean, compared to like base rates, UberX versus Alto, your price point is a lot higher than base rates UberX, right? So I'm curious how you think about it in terms of like the transportation
landscape. It's an accessible luxury, right? What we're trying to create is a luxury experience at a price point that people can justify and is value, you know, value service. So it's more expensive, but we want you to get great value from it. And so we price, you know, we try to price kind of in line, frankly, with what you might kind of expect from a XL or Select, or, you know, those kind of mid-tier products. We want you to have a better ride than you could get, a more consistent, safer, higher quality ride than you could get on average in a luxury service, a limousine or a Black. But we want you to get it at a price that is accessible. So our average fare is about 30 to 50% less than a Black fare. But it's, you know, that makes us 50 to 60% more than the cheapest ride that you can get. And when we look at the market, we say, you know, about 30% of consumers care about something other than price. I mean, we're very eyes wide open that there's 70% of consumers that the only thing they care about is getting there in the absolute cheapest way. And that's true, by the way, in every form of transportation, airlines and travel, hotels, cruises, casinos, everything. There's always, you know, this stratification. The reality is those 30% of customers that care about something other than price, experience, brand, loyalty, those customers typically subsidize the 70%, right? Because that's where all the profitability is. And so a big part of our model, again, is focused on growth and building a big company, but in doing so in a differentiated, profitable way. Gotcha. And so if we just capture that 30%, those are the customers we want.
Yeah, no, I think I totally agree with that. I've never heard the 30/70 kind of laid out like that, but I definitely agree. And I feel like I've often told people, that most people in transportation, they just care for about getting from A to B, right? Like the product and everything, all the bells and whistles are great additional value adds, right? But like I think the number I've used is like 90% of the value comes from getting from A to B, right? And you could have a car that's barely moving, but as long as you get to B, you did get 100% of your intended destination or product, right? It might not have been the way or the route that you wanted, but you are getting 100% of like what you intended, right? Versus other areas like food delivery is a good example where I'm a bit more skeptical, right? Because every minute that a food, delivery order is delayed, the product is deteriorating. You're not getting 100% of what you expected, right? With every minute. So if you batch an order, for example, obviously that second person is going to get cold fries, right? So I think that's definitely makes sense. And so I guess my experience, taking Altos in LA, I won't generalize too much, but I feel like the price has typically been about 2 to 3x Uber X. So kind of much more similar to Uber Black rates, which to me, I haven't really found it personally to be cheaper than Uber Black. I've sort of found it to be equivalent, but honestly, I'm okay with that because, the times like I took my wife out to dinner last Friday night and, we called an Alto. I guess the things that I really like is that, you get the nicer car, you get the experience, but I guess the smaller things to me have been what mattered. Like, for example, just having the driver there and being willing to wait. Like, I feel like that has been sort of one of the things I like most, right? Even if you call an Uber Black or an Uber X, when they get there, they're not getting paid for that waiting time, right? So, like I'm always telling drivers, like, get these drivers, or get these customers out there, hustle them, because you're not making money unless you're moving. And that's one of the things that I actually really like about Alto is that, it gives me like, I'm not keeping them there for 30 minutes, but it's like, if I need to be at dinner at 7 and it's like I can call the Alto at 6:30, I don't have to put a lot of thought into it. It shows up 6:40, 6:45, 6:50. I know I'm only 10 minutes away. And so I feel like that's sort of what I've personally gotten the most value out of. I don't know. I'm curious what are you
That makes
hearing
a
from
ton of
Alto
sense.
customers?
I mean that kind of that sense of removing the anxiety, right?
Yeah.
Of hey, I'm getting into someone else's car. What's the experience going to be like? Which car is it going to be? Is the driver going to be good? Is it going to smell funny? Is my wife going to like it? Is this going to start my evening in the right way?
Well,
That's what we're really trying to do is remove that anxiety, create that
yeah.
consistency, and put this is hospitality, right? That is for us the big difference is that it's similar to the difference between getting a Westin hotel room
Yeah.
and an Airbnb. There's great Airbnbs, but there's a sense of a little bit of unknown anxiety. You don't know what you're going to get until you show up and you open the door. What's it going to smell like? Is the last person going to
Yeah.
be clean? And if you go to the Westin, you just know what you're going to get. And it's not it's not necessarily like the nicest thing you've ever stayed in or
Yeah.
seen, but it's very consistent. And I guess just to pricing, I would say I don't know what your kind of average. We do charge more for longer rides. By the way, we take a higher and higher premium the longer your rides
Yeah.
are.
Well, that's
A
sort of
lot of
why I
rides
didn't
in
want to make
LA
any
are
sweeping generalizations, right? Because I know that a lot goes into it. And I think actually maybe one thing that I'm curious sort of how you think about it, in relation to the customers and what their other options are, right? Because I think one thing, I don't know if you or someone else pointed this out a while back, I was thinking, if you compare it to Uber X rates, it's 2 to 3x the cost. But how often is Uber X, at normal base rates, right? It's sort of like,
right.
Kind of an unfair comparison depending on the time and the place and the route. So I'm just kind of curious how you think about that in terms like, when I try services and products, I literally like take all of my personal feelings out of the equation. I'm like, I don't know, Will, I don't care about this guy. Forget about this guy. I'm going to take this as like a true customer, a true consumer. And it's like, there have been rides where it's like, hey, I'm just going 10, 15 minutes away. Like Uber X is $10 and Alto is 30, 35. Doesn't make a lot of
Not worth
sense.
it.
But, there's rides where I'm taking my wife out. So I'm just curious, kind of like when you think about, because obviously you guys are trying to differentiate here. So when you think about the differentiating factors, like what do you think kind of like matters the most, kind of beyond like the anecdotal? Like I'm curious, what do you do with like all this anecdotal feedback you're getting from people like me or surveys that you're running? Like how do you actually use a lot of this data or feedback that you're getting?
Well, I think what you have to do is you need to take it kind of in. You do need to generalize, right? Because the reality is that, it's very difficult to compare on an individual by individual basis.
Right.
And each individual ride, there's dynamicism in the pricing, time of day, a bunch of stuff goes into it, how long you make the driver wait, what kind of route you took, all those sorts of things. And so it's almost impossible for us to say, okay, on a ride by ride basis, here's what to expect. But we can look at the overall data, and I can tell you that when we compare all of our rides to kind of the averages for Uber and Lyft, we can see that we're placed where we want to be across all of our customers taking all their rides. So that, on a pricing point, that's how we think about it, right? Is that it's impossible to figure out kind of on an individual ride basis. Sometimes we're going to be much lower, sometimes we're going to be much more expensive.
Yeah,
that's we can't really solve for that. But I would say, on a feature basis, what we've tried to do is create features that matter to different customers for different reasons. And so the three things that we focus on are safety, which matters to a certain set of customers, may matter less to you. Hospitality, which is something that may matter, to you in certain instances and not in others. And consistency, right? And we think that matters kind of to most of our customers all the time.
Yeah.
And so because of the way that our service works, and because of the fact that we're taking this fixed cost risk, we need a bunch of different types of consumers. We need you going out to dinner with your wife. We also need B2B customers that we haven't yet talked about. We need kids riding to and from school or after school activities. We need older customer that maybe is more worried about their safety or the consistency of the product. And so what we've tried to create is something that works for all those different things. And for you, it might be about that kind of lack of anxiety. For my wife, it's really all about the safety.
Gotcha.
It's about knowing what she's going to get in terms of the driver's going to be uniformed and a W-2 and background checked and fingerprinted.
They've been actually interviewed.
Yeah, exactly.
Yeah.
And somebody saw them that morning and gave them the car and all those sorts of things, right? But I think that's how we think about it, right? Is that we got to create something that works for a bunch of different people for a bunch of different reasons, and that creates value for them based on their rationale.
For sure. Well, and I guess actually like the one thing too that came to mind from a lot of everything you're mentioning is it feels like there's like an education component too for your customers. Like I actually don't know how many Alto customers like know a lot of the things that you just said. I literally only know that drivers are paid to wait, right? Like in all of my trips, no driver has really kind of, because they're like being respectful. And, I don't think that I've seen, if I put my customer hat on, that like the fact that I could even really take advantage of this waiting and, that the drivers aren't going to hustle you. And you do get a text message saying, the first 5 minutes are on us. But I feel like that's something that matters to me. And I never really saw it. And I guess similarly, right? Like no one's ever told me from the Alto side, and I don't expect the drivers to give me like every little point about it. You kind of have to balance that. But it seems like it's a little bit of a challenge, or you don't want to push it too hard, but you kind of have to get the word out that like, hey, all of our drivers are literally background checked. They come and pick the vehicle up. Like I didn't even think about that. They pick the vehicle up. We inspect it after every trip. I talked to an Alto driver the other day, and he says he goes around the car after every single trip and checks and makes sure no one's sipped the little water bottle, cleans it out, makes sure it smells good, the small stuff. So I feel like there's kind of like a bit of an education component there too. And I don't know how you educate.
You've done a
customers.
Great job, Harry. Thank you so much.
I don't know. I don't know exactly how you educate customers about all of that, but I feel like it's a little bit of a missed opportunity right now.
Yeah, well, thanks for the feedback. I think that's important, right? We think about it as it's actually really difficult to communicate because it is so many things that kind of.
Well, because when I open the Alto app, I just want to ride. I don't want to know about the company. I don't want to know. I just want to ride, right? I don't want to hear about.
What we try to do is have that come through in the experience, and we believe that we're really experiential product, and so we invest a ton. Really, all of our marketing, or the vast majority of it, goes to like getting people into the car and having them try it, because we know that once we get somebody in, those things you can tell somebody about the smell,
kind of just happen
until you experience it. Then it's like, I get it, and so that's how we think about that. But I think it definitely means we also could be doing a better job storytelling.
It's experiential marketing, right?
Yeah, which by the way is really tough. Because you can't experience it anywhere but the car. We've thought about, should we set up little booths that people can kind of come in? But that's totally that. Then it's manufactured. And nobody wants to sit around like at an event when you're like leaving an event. You don't want to like scroll through a video to watch about the Alto experience. You just want to get in a car and get home.
Definitely.
And so well, I'm gonna take that back and we'll think about it. But I think that's how we think about it, is really about trying to convince people just to try us and let us show you the product and let the product speak for itself.
Cool. Well, we mentioned it a couple times, and sort of the final topic that I wanted to end on before I give you a chance to ask me a question was the B2B side of things. And, I think I saw the stat that 30% of your revenue has been, in the past 18 months has been B2B. And I guess just tell me, talk about a little, like, what does B2B even mean? Because I feel
Yeah.
like I'm seeing this shift with a lot of the specialized rideshare services. They're talking about NEMT, rides for minors, rides for, people that care, more of the Uber Black rides, right? I feel like this B2B shift is happening across many areas of transportation. So I'm curious to know what it means for you guys.
Yeah, for us, it means, simply, it means that someone else, another business, is paying for the ride,
Got it.
and the person that's in the car is their customer, not ours. And so when we really developed this, by the way, in the pandemic, as a necessity, frankly, as a way to survive, because consumers, you and I were
Yep.
stuck at home. But what we saw was that several of these other types of essential businesses, from hospitals and medical providers to car dealers, hotels, there was commerce that was happening, and they needed a way to support their customers. And we had a brand alignment, a values alignment around safety, hospitality, and consistency. Our brand kind of spoke to and matched well with their brand. And so we developed this product, which it uses our same vehicles, our same drivers, our same matching algorithms, but it's a totally different booking and management experience that's through a web portal where you can book, manage, hundreds of rides at one time.
Interesting.
That now represents a really significant portion, 30% or more of our revenue in many of our cities. And our new cities, actually, what's been really cool about it is that it solves for one of the things that you just said, which is, how do you create this awareness? And when we open a new market, we're able to sell into a lot of these businesses very quickly, because again, we believe the product really speaks for itself. But if you got to sell to one person in a business, or a couple people, you can take one car there, you can get them all on a ride, and then they say, yeah, this is great, I want to sign up. And then they put a ton of people in the car. So it creates occupancy from day one, which is great for us. We talked about that early. But it also creates experience, because their customers are getting free rides in Alto, or free to them. And they get to see and feel and experience really what we stand for. And so it really helps us create this awareness from the early days of a new market. It's very much supported our growth on the consumer front as well. And so that's I think the biggest reason that we're most excited about it is that it's kind of a win-win. We believe it's very valuable for the businesses. It creates better customer service outcomes for them. It's great for us in terms of occupancy and early growth, and it's a great way to kind of spread the word and build awareness as well.
So I guess real life example, I'm assuming I'm a luxury car dealership, and I want people to come in for a test drive or bring their vehicles in for maintenance or something of that nature. I can just go on to the Alto website and basically book rides for those clients. Is that sort of how the actual product works?
You need to we'll set you up for an account, but if you're you're a car dealer, and probably you have a loaner fleet, but by the way, your loaner fleet is probably pretty compressed right now because of vehicle availability. Your service is one of your most profitable parts of your business, and so you want people to bring their cars in for service. By the way, you want them to bring their car in, but you want them to take their car back as fast as possible. If you give them a loaner car, they're kind of disincentivized to come back and pick up their car because they got a car. But if you send them home in an Alto, and then an Alto comes and picks them back up, you can get more throughput. So for
I've literally, taken my Tesla into the Tesla dealership, and they gave you the option of renting a Tesla or, taking an Uber home. I'm like, I'll take the Tesla, obviously.
Right.
Yeah.
But if they don't give you that option, then you're more likely to come back the same day. They get more throughput. For hotels, we've seen this is a great option to replace house cars. A lot of hotels like to have an amenity of a house car for guests to be able to go to dinner nearby, or make short runs. The problem with that is that there's huge spikes in demand. Everybody wants to go to dinner or get picked up from dinner at the same time. They got 400 room hotel. They have two cars, one car. Then it doesn't really become a mini because you ask for it and you can't use it. What we're able to do is replace that fleet, take that cost out from them, and give them the variability of being able to request 4 or 5 cars at once and then not have to deal with it. Same thing for events. We've partnered with everybody from football teams to golf tournaments to get VIPs directly to the entrance gate. It creates a great experience for them. They save on parking. And so we see just tons and tons of this kind of opportunity. Medical providers that are trying to get patients to show up to appointments, the hospital. So I think there's we're really just scratching the surface, we believe, on this, and it's something that we're really focused on to continue to build.
Yeah, I think actually you guys provided rides for our VIPs and speakers at Curbivore. I think I might have even gone behind your back and set that up. You didn't even know that Alto was providing rides, but it was cool.
I'm glad that we could help.
I remember specifically, I don't know if you know this guy, but his name is Donald Shoup. He's the parking god at UCLA, and he was one of our speakers. And he rolls up in an Alto, and he told me, it's like, that was a pretty nice ride. And I said, yeah, it was. So definitely.
I don't know. It sounds like a guy I need to know, the parking god.
He wrote the famous 1100 word page, 1100 page book on the high cost of free parking, I think is his book. And he's got a loyal following online on Twitter, I believe. But enough about Donald. So you mentioned real quick the verticals, luxury car dealerships, fancy hotels, events. Are there any medical providers or anything else briefly on that?
Yeah, I would take the words fancy and luxury out of a lot of those things. I mean,
okay.
Again, we really think that this is a product that works for a lot of people. I mean, we have car dealerships across the spectrum from what you would consider luxury brands to, more mainstream ones, hotels, everything from Westin to, the Four Seasons. And so
Gotcha.
I think.
But I mean, Uber and Lyft, if it's like a Toyota Camry that you're taking in for service, right? Like they might be less, willing to pay for the cost of Alto versus Uber X.
You know what? I think again, this consistency point is really important.
Gotcha.
And car dealerships, by the way, are really, really judged on their customer service. At the end of your experience with a car dealership, you always get a customer service score. They call it the CSI, their customer service index. And that score determines their priority to get more cars. And to expand their dealerships into other places. And so taking care of their customers and ensuring that they have a great experience, both when they're in the store and then when they're, getting to and from it is important, I think, across the spectrum.
The last thing I wanted to ask you on the B2B side, what about airport and business travel? Does this sort of fit in? Because I think we've seen these stats before, talking about Uber, 10 to 15% of their rides are airport, but, the rides are longer, they're more expensive, they're Uber Blacks, right? So it's like 20 to 30% of their revenue, right? I guess I'm curious, sort of what your, sort of line of thinking there and kind of what your experience with Alto has been in the airport and sort of business segment more generally.
Yeah, I mean, we call that corporate, so it's a little bit different. In that case, the person paying for the ride is typically the person taking it, and
so that's not,
we see that as,
that doesn't fall under
your B2B. We don't call that
B2B.
necessarily B2B, but it is a different segment for us entirely. It was about 30% of our revenue pre-COVID. It went to zero. In fourth quarter of last year, I haven't looked at it this year yet, but in fourth quarter, it was still single digits in terms of revenue. So it just is a segment that hasn't really fully come back. People aren't traveling as much for business, in particular in bigger corporations. Smaller companies are getting back faster, and we're seeing that in our travel. But it's something that we're super excited about, and that we know is going to come back in some form or fashion. Maybe not to 100%, but to a large extent. And we're building out new products for that to offer corporate memberships and corporate expensing and integration with expense tools, because we know all those things are really important to make the experience end to end really convenient and easy for corporate travelers as well.
Yeah. So, I mean, I guess, that makes sense that it's a different category, because I mean, I think this B2B option, for real, the last question on B2B is then, I mean, I guess it seems like a lot of the specialized rideshare is kind of gravitating towards these B2B, obviously Uber and Lyft, mass market product, they go B2C and they kind of dabble in B2B, right? And it's like their product doesn't actually work that well for a lot of B2B, or, has some issues. But I'm curious, does the B2B, I see the synergies, if you're launching a new market, maybe you've got anchor clients, tenants, you reach out to this hotel chain and, you've got 10 hotels, for example, that, when you launch a new market, right, sort of a nice anchor client group of clients. But is there any sort of potential downside cannibalizing? Like, I know I was meeting with a company the other day, and frankly, they were like, our B2B is doing so much better, and we think there's so much better opportunity. We're going to kind of cut the B2C side of things. So I'm curious how you think about the two, because obviously there's some synergies, but, how do you think about that more medium to long term?
Yeah, we think that it's a delicate balance. It's something we talk about a lot is how do we make sure that what we are doing is creating, kind of incremental growth and not cannibalistic growth. And that we're thinking about how do each segment of these customer bases contribute to our overall growth in again, a profitable way. A lot of our B2B customers, rightfully, I mean, they're big customers, huge customers, very important to us. We give them discounts, major discounts in order to attract them and retain them. But if then we can't take consumers who pay full price, that is difficult. So we have to manage it closely, and we think that 30% is about the right percent. If B2B became 70% of our business, the profitability equation becomes much more challenging, and the opportunity, we think we'd be giving up too much on the consumer front. So it is something that we're not looking to kind of like totally transition the business, but that we believe plays an important role.
Cool. Yeah, no, that makes sense. I like that ratio for now. You can shoot me an email if that changes in the future and we can discuss. But I appreciate you coming on and really giving us the update and sort of, diving into some of these areas, especially on the driver piece and the B2B side of things. I know if folks want to drive for Alto, we'll leave a link to the website. I'm going to give you the chance to ask me a question here, but feel free if folks want to learn more about yourself. I know that you tweet a lot. If they want to learn more about riding for Alto or driving for Alto, where can they go?
Yeah, if either case, you can go to our website. RideAlto.com is our consumer site, and DriveAlto.com you can apply to drive. And you can learn more about all of our features, what we, how we differentiate ourselves. But you can also download the app there, or directly in the Google Play or Apple App Store by searching Ride Alto.
And I see on ridealto.com, if you enter your email and your postcode, it says enter your email to save on your first Alto. So I'm assuming there's a nice little discount
if you give us your email
too.
address, we'll shoot you a promo code.
Very cool. All right. Well, I appreciate that, Will. Now I'm going to turn the tables, and I've had you for a long time, so we'll make this brief. But
Harry, I'm always just interested to learn more about what drivers are saying. You're super in touch with them, and what's the kind of number one issue on the top of drivers' minds right now?
Yeah, I mean, I think the number one issue is probably the same issue it's always been, is pay. I feel like regardless of the situation, macro, micro, it's drivers always want to make more. They're always looking, complaining. I think it's just sort of natural. I don't even know if it's exclusive to the gig economy. I think that everyone is sort of always looking to make more, right? I mean, I think I saw this quote the other day. It's like, it's not always all about money, but it's like a great scoreboard, right? It's like, hey, if I'm doing well, I should be making more, right? If my boss is happy, my boss is happy with me, he should probably pay me more, right? And so I think that for drivers, it's sort of about that. But at the same time, I think there are a number of opportunities. Earnings right now are pretty high. You mentioned the $27 to $29 an hour figure during prime time. Obviously you don't have any expenses for Alto, so it's a bit of a apples to oranges comparison with Uber. But they pushed notification to my phone the other day saying their average for drivers is $29 an hour, right, before expenses. Our top guys are making $40 to $50 an hour, like Sergio. So I think that it's sort of a different environment where if you're kind of like actively seeking it, you can get out there, you can do well, you can switch over to delivery. You've got a number of opportunities. If you kind of want to go more the employee route with someone like Alto, like you guys are hiring, like I know you have a lot of new drivers here in LA and are always hiring. So I feel like it's sort of, like I guess more positive than negative than it's been in the past. There's like more opportunities, which I think is kind of a cool and unique thing, because I feel like usually drivers are complaining about pay and I don't have like a great option for them. I'm like, I'm sorry, that's rough. But it's like right now, if you're like complaining that you're not making enough, it's probably a little bit more of a you problem. There's always positives and negatives, right? But I feel like right now there's
lots of opportunity.
Lots of opportunities. And frankly, it's kind of like been like that for almost 2 years now, right? More than, coming up on more than 2 years because of the pandemic and all these other things that are going on. So I think in a way it's been sort of a little more fun and exciting for me, because I kind of prefer talking about the, like I'm more of an optimist, right? So like I prefer talking about the opportunities and the cool new things to try. Well, don't get me wrong, we'll cover anything bad that happens, right? Like we obviously did a lot when gas prices were high and we're like, oh man, company's got to do something about this. But I feel like the positives are definitely, greatly outweighing the negatives right now.
Awesome.
Cool.
Yeah. Well, thanks so much for having me on.
Appreciate it. All right. We'll hear from you probably for your fourth time very soon.